marketplace, I think it's going to be their promoted listings. Now, there's two benefits of that. When they push forward a promoted listing, they get the take rate, right, from just selling the product on eBay or on Meta through eBay. And they also get ad revenue. So you get 2 in 1. So I think if this happens, and if it has staying power, there is a huge opportunity for not only eBay's GMV, but also its revenue as the take rate rises for more ad revenues.
Okay, so that's the business side of things. Remind everybody, though, where eBay sort of sits as a marketplace right now, as a retailer, and what its niche is.
Sure. So eBay is the largest resale marketplace in the world. It garners about $75 billion in GMV on an annual basis. GMV has been shrinking for the past few years as it caters more towards high-value buyers, but we expect that to turn in 2025 with a slight low single-digit gain. Now, the opportunity for eBay right now is the take rate climbing. So eBay's take rate historically has been in the high single, low double digits, and we're expecting it to get to the mid-teens due to its efforts from advertising, payments, authentication, a focus on their focus categories. Those are all opportunities for them to expand their customer base and really get people to think of eBay first, right? eBay's lost some share in years to other resale rivals like RealReal, if you think about it, right? Where do you buy your luxury handbag? Do you go to eBay or do you go to RealReal? I think more will say RealReal than eBay because they don't know.
I go nowhere because I have a kid in college, but I'm just going to say, hey, GMV, by the way, stands for gross merchandise value. All right, so you said it's a test, so just got 30 seconds, Poonam. So what are you keeping on your radar?
I'm just going to watch to see if the appeal goes through or not, because that's going to determine if eBay can monetize on this huge opportunity that's in front of it.
What's the date for that appeal? Or do we know?
I don't think we know the details.
I guess we don't, right? Yeah, because it's probably just in the works. Great stuff as always. Thank you so much. Poonam Goyal, she's senior analyst for e-commerce, athleisure, off-price retail, with the latest on what's going on with eBay or the potential. I mean, that stock, as I said, it's my #1 gainer. When we head over to our TV colleagues, still with about a 9% gain as we speak.
Yeah, really to stand out in today's session, given that the S&P 500 is flat right now. Other movers into the upside include Boston Scientific up 4%, GE Healthcare, Medtronics. On the downside, it's kind of my area where I play, Carol, Edison International, as a result of what's going on with those fires out in Los Angeles.
And that's exactly where we're going to go after a quick break. When we come back, an update on those raging wildfires in Southern California. You're listening and watching Bloomberg Business Week on this Wednesday. Carol Masterton Stanovic. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. We have got the Dow, the S&P both trading higher. NASDAQ in the red. S&P up, barely up 1 point. That is less than 0.1%. The Dow up 43, now up 0.1%. NASDAQ down 26, a decline of 0.1%. 10-year 4.67% with a 2-year 4.27%. Gold up $11 the ounce, 26.60. That's a gain of 0.5%. West Texas Intermediate crude down 1.2%, 73.38 for a barrel of WTI. Investors, meanwhile, keeping an eye on Washington. Alicia Levine is head of equities and capital markets advisory at Bank of New York Mellon.
We know that the upcoming president cares very much about the performance of the market, and he was elected because of inflation. And he's got some serious folks in the Treasury Department, and I think we have to remember that.
Alicia Levine, Bank of New York Mellon. Constellation Energy in talks to acquire Calpine Corp in a deal valued at around $30 billion, including debt. And Indonesia has kept a ban on the sale of Apple's iPhone 16, saying its billion-dollar plan that includes building an AirTag factory is insufficient to meet local investment requirements. Recapping, S&P just about flat on the day, up barely now by 1 point. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Our coverage of the devastating fires in Southern California continues. Our live vlog out with the latest: 2 dead, a high number of significant injuries from the fires as firefighters struggle to contain blazes in Pacific Palisades and Pasadena. Carol, more than 23,000 acres have burned in 24 hours. Utilities have cut power to thousands of homes and businesses. My brother's out there in South Pasadena.
How's he doing?
He's getting out of there, waiting for his girlfriend to get off of work. I think they're going to head up to the Central Coast to see my parents, but he's been without power since yesterday.
You know, I feel like we're all kind of messaging everybody out on the West Coast. I mean, it's real. And like, you just have a matter of time to like kind of leave your homes and so on and so forth. And something that we're continuing to track, because this fire is expected to continue for at least a couple of days. For the latest, and we've been trying to track it in real time, and to really help us understand the connection between weather and climate and the insurance story, which is, yep, we're a business organization, and that is an aspect of it, no doubt about it. We're joined by a great roundtable. Mark Ungloff is editor of Bloomberg Opinion. He covers climate change for us. And also back with us is David Baker. He's Bloomberg News energy and climate reporter. Mark is in New York. David is in San Francisco. David, let's go back out to the West Coast. You've been keeping us up to speed on what's been going on. What's the latest at this hour that you are hearing?
Well, none of it is good. The fires are still utterly out of control, most of them. The 2 biggest ones keep growing. We keep getting updates from CAL FIRE. The Palisades fire is now above 11,000 acres. The Eden fire above Pasadena is now above 10,000. And they're not just burning through woodlands or grassy hillsides, they're burning through actual neighborhoods, both of them. We have more than 120,000 people evacuated. They are filling into hotels. They're calling up friends and family, trying to find a place to stay. And it is starting to really paralyze life in our second largest city.
We just want to mention for those who are watching right now on YouTube and, of course, on our Bloomberg Original streaming channel, that what you are seeing right now is a live shot of the fire. So we're not quite exactly sure of the location here, but obviously within the area that we've been talking, the Pacific Palisades, Pasadena, those general areas, but that's what we're seeing right now.
David, I'm racking my brain here trying to come up with a recent historical corollary to this, historical precedent to the scale of this evacuation and how many people and structures and homes are at risk here, and I can't do it. Is this unprecedented, or do we have historical examples of when fires have threatened and indeed devastated areas such as this in the past?
It's funny you say that, because I was having this conversation with an editor a few minutes ago, and honestly, I think the closest thing that you can compare this to is the 1994 Northridge earthquake in L.A.
I thought of that.
I mean, in terms of a natural disaster of this scope affecting so many people, that's probably it. California, we've endured so many bad wildfires in the last decade, but most of them have been in rural areas, not in a major city like this. And yeah, this is something different.
Mark Ongloff, I want to bring you in. I've been watching your face on the monitor, and you're shaking your head here. You know, I feel like you, me, Tim, we have these conversations of just when we think it can't get any worse, it certainly feels like it can.
Yeah, it's really grim. And when we were talking about things that are unprecedented, one of the things one of the scary things about these fires is that they didn't exist Tuesday morning, like 36 hours ago. They didn't exist. All we had was a warning from the Weather Service that there were going to be strong Santa Ana winds, maybe the strongest ever, the strongest since at least 2011 when there were some really devastating ones. And they warned that there was an extreme risk of wildfire. And this is the first time that the National Weather Service has ever warned of an extreme wildfire risk in the lower 48 states in January ever. And so right away you got this sense, well, this could be really bad. And, we hoped that it wouldn't be, but it has turned out to be as bad, if not worse, than we expected.
Santa Ana winds, Mark, nothing new, as you write in your piece. What's unique about this moment in history, the development of this area, and what's been happening in the broader climate over the last 3 decades or so that create this really combustible mix?
Yeah, it's a toxic mix, as you say. Santa Ana winds, wildfires, those have been part of California life for forever. The difference now is that climate change has made a lot of factors much worse. So you get a lot of rain and snow and during those seasons, and that is great. It produces you get a lot of water, but it produces a lot of plants. And then during the summer and fall seasons, when you're not having any rain, the air is hotter, the air is drier. All these plants that grew during the spring are drying out and providing kindling for these fires. The air is drier, which makes it more combustible. The other big problem here is that we have built millions of homes in the wildland-urban interface, where maybe wildfires used to just burn and only affect plants and trees. Now the houses themselves are serving as kindling for these fires, and so you have these fires that are hotter than usual, moving faster than usual, and they're jumping to houses which are burning and then creating their own kindling to spread the fires even faster. And it's a scary situation.
It makes me think of the conversations we had over the summer, or was it fall, really? I got to kind of remember my timing here, but just in Upper Manhattan or across the Hudson along the Palisades, something that we've never seen. And what's unusual is that once again, you're having these wildfires because of dry conditions, and they're happening in places that are very, very heavily populated or near major cities. You're talking about a lot of people, and there's a lot there that can quickly catch fire. David, I want to go back to you. We know President Biden was in the region. He was there with California Governor Newsom. What are we knowing about resources that are coming in and that making sure that everything that can go to fight these wildfires are there?
Biden has pledged federal support for fighting these fires and for helping recover afterward. Newsom has done the same at the state level, and Newsom has quite a lot of experience with this. His tenure as our governor has coincided with many of the worst of the fires we've experienced. That said, in terms of actually getting these fires stopped, there's going to be not much either man can do until these winds start abating. I mean, the main thing driving this right now really is the weather, and it's going to be the case for the next couple of days. As dreadful as all these images are that we're seeing here, and as many people as we throw at the firefight, we're still going to be stuck with these fires growing for several days before we see the full extent of the damage. And bear in mind, there's the possibility of another windstorm bearing down on us early next week.
Hey, David, one last question, then we want to let you get back to your reporting, because we've been leaning on you heavily in understanding day by day, or hour by hour, I should say, what's happening. I am looking at the live blog on the LA wildfires, and the leader of the California State Senate, Mike McGuire, saying some neighborhoods didn't have proper water flow during the blaze. I mean, is there the concerns, the threats, already the reality that there's not water where it's needed?
This is what President-elect Trump was referring to in some social media posts earlier today, at least obliquely. There was last night in Pacific Palisades, they were taking so much water out of the hydrants to fight this fire that it tapped out the system's capability to deliver more water. And there in the Palisades, they have these water tanks that are able to feed extra water into the hydrants in emergency situations. They even tapped out those as of about, I think, 3 a.m. this morning. Now, the city, which runs the water system there, has been bringing in portable tankers to make sure that doesn't happen again. But yeah, essentially, they're using every bit of water they can get their hands on.
All right, so appreciate the update, and I'm sure we'll be leaning on you later today as well as into the next couple of days, but hopefully less, because that means we're getting these fires under control. David R. Baker, Bloomberg News energy and climate reporter, joining us from our bureau in San Francisco. We're going to let you go, but we're going to continue with Mark Ungloff.
Hey, Mark, your most recent column is about fires exposing a $1 trillion hole in home insurance. You write about homeowners in increasingly risky areas not being able to obtain adequate coverage as insurers flee the state to avoid losses. We're talking about places including Pacific Palisades. What's happening with the insurance market, and what are these, in these areas of California, what are these homeowners doing? What is the system, and what is the program that they're tapping into?
So these houses that we were talking about have become kindling during these wildfires, and insurers noticed that years ago and started pulling out of the state. When they did that, they started raising prices and pulling out of the state, or pulling out of these risky areas. When they did that, some homeowners who you need to have insurance in order to get a mortgage, they turn to less regulated insurers, which are more costly and more risky. A lot of people, though, have turned to California's state-run plan, the FAIR Plan, which has tripled in size, tripled in its obligations over the past 5 years. Almost $500 billion worth of potential losses there. If all the homes in California went up, it would be $500 billion. $6 billion alone in the neighborhood of Pacific Palisades. It's one of the heaviest users of the FAIR Plan because State Farm and a lot of big insurers pulled out of Pacific Palisades a while back last year and said, we don't want to insure you anymore. So a lot of these people with very wealthy homes, I mean, the average house in that neighborhood is $3.5 million, which, for California is maybe not that high, but it's still pretty high. A lot of these people are using the California FAIR Plan. California FAIR Plan, at last count, only had $700 million in the bank. And so if just a percentage of the damages in Pacific Palisades, in some of these other neighborhoods close by, in Pasadena, are going to fall on the FAIR Plan, then the FAIR Plan is not going to have enough money, and then it's going to turn to other insurers in the state. And when I talk about California, this is just one part of a national insurance crisis. This is a problem that we're seeing in states all over the country.
Mark, are we doomed? Just got about 40 seconds. I say this because one of the stories Tim and I talked about yesterday, JP Morgan quitting the Net Zero Banking Alliance following Citi and B of A. And this has to do with, they say they're going to work independently to advance low carbon technologies and support, clients engaged in energy transition and decarbonization. Forgive me, I'm rushing through. But I mean, I feel like, this feels like everybody's turning their back on climate change while we're watching these fires. Got about 25 seconds here.
Crazy cognitive dissonance here. We are not doomed. We are only doomed if we don't do anything about it. New York State could regulate the banks and try to make them stick to some of their climate promises. We can all put political pressure on our elected officials to say, hey, look at what's happening. We're losing money in on home insurance. There's a potential financial risk here. Please do something. And just health risk and lifestyle risk. Please do something about this. We can do that.
Well, and everybody read Mark Ungloff's columns, because that'll make you do it. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks drifting and little change. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a choppy session today with the Dow currently up 19 points. S&Ps are down 3, while NASDAQ is lower by 0.3%. The U.S. 10-year yield is at 4.68%. Gold is in the green, oil is in the red, and Bitcoin, that's sinking by 2.5%. Among the main 11 S&P sectors, leaders were healthcare and consumer staples. Telecom and utilities were under pressure, and leaders to the upside in the Dow, UNH and Coca-Cola, while J&J fell 2.9% and led to the downside. In the utility space, Edison International plunged 13% on the California wildfires. And in deal news, Constellation Energy is said to be near a $30 billion deal for Calpine. Wrapping things up, Jefferies reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 20 minutes to go until we wrap up the trade on this Wednesday, January 8th. Yep, we are focused on the markets. Got to say, it's, as you heard from Charlie Pellet and Bill Maloney, really kind of a quiet trade, or little changes, I should say.
Unless you're a quantum computing company.
Unless you're a quantum computing company, right? You are really taking it
Still trying to figure out what they do,
down.
what those companies do.
Well, it's, I am too. Like, it sounds like there's going to be some collaboration with AI. I mean, AI is apparently going to be an application of quantum computing. I've been doing some searching around, but it basically is quantum mechanics, and it leverages or harnesses the laws of quantum mechanics
If you use
to solve really complex problems.
If you ask AI this question, does it eat itself?
Does
it become too meta? Is that what happens? Well, the reason I say that is because...
Why are you doing this?
Why? What do you mean?
I'm just kidding. I don't know.
Rigetti Computing, Carol, it's one of my decliners, down 45% right now.
Yeah. So it's kind of interesting. And I guess, it's going to use specific hardware. There's going to be algorithms. It's still in development. It's kind of all of our new world order. But it is interesting to see this group move in a big way. And some of it has to do with, right, what Jensen Huang had to say.
Yeah, Jensen said that, quote, very useful quantum computers are likely decades away. Here's what he said. If you kind of said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30, it's probably on the late side. He said this in a Q&A session during NVIDIA's Analyst Day. If you pick 20, I think a whole bunch of us would believe it.
Yeah, all I know is AI, which has been around for decades, and then all of a sudden 2 years ago, bam, you get a major development, or you get a major technological development or breakthrough, and then all of a sudden, these things that maybe are going to be 5, 10, 20, or, years away, all of a sudden maybe are not so long away. So anyway, that group, though, it is taking a hit on those comments from Jensen, who obviously knows this space and very involved, but it's something that we're going to watch play out. Having said that, I look at the S&P 500, folks, kind of an even split in the trade. So you've got about 265 names that are actually gaining ground in today's session, and you've got about 237 to the downside. I will say one of the most read stories, though, on the Bloomberg today, it's about Bank of America creating a group of specialists that cater to the ultra-wealthy. We're talking $10 million and above in assets. The bank is looking to capitalize on the growing ranks of super-rich clients needing complex financial products and advice. Our Drive to the Close guest works in the wealth management space. With us is Brooke May. She's managing partner at Evans May Wealth. They've got about $1.3 billion in assets under management, and she joins us from Indiana. Brooke, great to have you here with us. Tell us about kind of the wealth management business, because it just feels like everybody and anybody has a specific division that's wealth management. The big banks, smaller firms. Mm-hmm. What are you seeing in terms of who actually is kind of your higher net worth individual?
It spreads the gamut. High net worth individuals can come from all walks, all professions. We have a lot of tech entrepreneurs, in addition to CEOs of publicly traded companies, doctors and lawyers who've been good stewards of their money. So really, there are there are all types of high net worth individuals who are our clients.
What are they telling you right now about how they're looking to grow their money, their asset allocation, what they're thinking about when it comes to where they want to put their money? Because, or do you even have these conversations with them, or do they just say to you, hey, you do your thing, you're the professional, we're just going to give you the power?
A lot of it's the latter. That said, everyone's interests are different. Some want to grow their wealth and they want to grow it to the maximum and are willing to take the risks. Others say, I worked hard for this money, I want to protect it, and I want downside protection. So, really we try to customize portfolios to individuals and make sure that it meets their needs. One theme, though, we see consistently across the board is that family is very important to these high net worth individuals. And they want us to treat their kids and their grandchildren as if they're ultra high net worth, and help them with charitable gifting in addition to educating them on being an investor and really all the things that come with that.
Hey,
so
Brooke,
I would say that's really the number one priority.
Playing to the B of A story, though, what's the kitty worth? Like, what do we, I'm curious about what is your typical ultra high net worth individual? Are we talking about 2 million, 5 million, 10 million? Is it, you said doctors, is it former business owners? What's typically the type of their portfolio or the amount, the value of their portfolio that you're managing for them?
Our ultra high net worth client is around 20 to 100 million. And we have clients that are below those levels that are still high net worth, but we would consider the ultra high net worth and the more specific, unique needs to be in the space of 20 million plus.
Are they all looking for outperformance? In other words, stocks, bonds, all that good stuff, but they really want to be in the private markets. They want to be investing in startups. Like, where is it going and where are you guys putting it for them?
Yeah, we're broadly diversifying. We have balanced portfolios for our high net worth clients. We're equity biased, so we do have more in equities than a lot of other shops, but we balance that with fixed income. And then we've been incorporating alternatives the last few years, just to diversify. And as these individuals are at cocktail parties, their friends and associates are talking about these unique investments. And so it's something that we've spent a lot of time learning about and investigating, and then offering that to our clients as well.
What, in terms of alternatives, what's sort of top of mind for you in 2025? When, alternatives encompasses a lot. It could be real estate, it could be private equity, it could be venture capital, it could be private credit, it could be, many more things. What's alternatives to you?
We really like the private credit space. It's been the buzzword for the last few years. Private credit space to us, though, isn't your safe money. And I think a lot of investors don't understand the private credit space. Oftentimes in private credit, they're investing in companies that aren't necessarily considered investment grade. And oftentimes these products can have some leverage associated with them. And there's recency bias. We haven't been in an environment with a lot of defaults. I've done this for 25 years, and if I look back to 07, 08, 09, where there were a lot of defaults, a product that's got lower quality companies and some leverage can really have a lot of downside. So we are incorporating private credit into the portfolios, but doing it for the client that's a little bit more accepting of risk. In addition to that, we like senior retirement communities. That's an area where we've been investing for clients and think that there's tremendous growth and upside there.
We just had a guest on that represents the REIT industry, and he specifically, unfortunately, off air, we were asking kind of what are the hot areas, and one of the areas he talked about in terms of real estate was specifically the senior housing area. We're talking about John Worth, Executive VP of Research and Investor Outreach at NAREIT, National Association of REITs, but that is certainly something he highlighted as well. Hey, Brooke, thank you so much. Happy New Year. Brooke May, Managing Partner at Evans May Wealth. They've got about $1.3 billion in assets under management, joining us from Indiana on this Wednesday. Folks, we're just under 10 minutes to go until we bring this trading session to a close, and bouncing around, but little changes on this Wednesday, Tim.
Kind of a funky day because tomorrow the equity and bond markets are closed. In honor of Jimmy Carter, you and I will be here doing special coverage of the funeral of Jimmy Carter, but equity markets are closed. So you just got Wednesday and then Friday to round out this week.
And Friday, get the jobs report in the morning, so that could be something that really certainly plays into sentiment. Do not go anywhere. Head over to our TV colleagues shortly. We're going to take a look at the most read stories in the Bloomberg when we come back. This is Bloomberg.
This is Bloomberg Business Week with Carol Nasser and Tim Stenovac on Bloomberg Radio.
All right, everybody, we're getting ready to wrap up the Wednesday trade, Tim and myself, but we're going to head over to our TV colleagues in just a moment and count you down to the closing bell on this Wednesday, January 8th. Kind of little changes in the markets, but we'll get to more of that and some of the specific movers and gainers, because you do have some big names, or some names, I should say, moving pretty substantially. Having said that, speaking of moves, U.S. consumer borrowing dropping. So that's pretty big move.
Yeah, total credit dropped $7.5 billion after a revised $17.3 billion gain in October. This is according to data from the Fed that was released earlier today. The median estimate in a Bloomberg survey of economists called for a $10.5 billion advance. These figures are not adjusted for inflation.
Yeah, outstanding credit card and other revolving debt decreased $13.7 billion, the most since early in the pandemic after surging a month earlier. Non-revolving credit, such as loans for vehicle purchases and school tuition, increased $6.2 billion. Again, this is according to the Fed's report. Data suggesting consumers are making an effort to pay down their debt. Credit card balances, in particular, as borrowing rates remain near a record, well above 20% Americans have relied more on credit in recent years to help support spending amid persistent inflation. There was a lot of money that would come through during the pandemic, and we kept kind of waiting. After that, we felt like it should be spent or used up, and we kept waiting for consumers to kind of pull back on spending. And I wonder if they're paying down debt, are we going to start seeing that show up in the spending numbers?
Yeah, Americans have relied more on credit in recent years to help support spending amid persistent inflation. The rise in non-revolving credit likely reflected stronger auto sales, which accelerated in November at the fastest pace in more than 3 years. They continued to rise in December as lower auto loan rates and more manufacturer incentives helped lure buyers to showrooms.
If you're into rates, and who isn't? We certainly are here at Bloomberg. Fed's report showed rates on credit cards that charge interest. Excuse me. Let's try that again, shall we? Redo. The Fed's report showed rates on credit cards that charge interest stood at 22.8% in November. A 60-month loan from a commercial bank for a new vehicle purchase was 7.82%. Both down slightly from the third quarter. Woof is right.
So you add that into the higher cost of autos these days, and you got a lot of folks out there paying close to $1,000 a month for their auto.
Pay some rent,
That's
put
a
some
lot
food on the
of
table.
money.
Like,
That
what
is
the
a
heck
lot
do you
of
have
money.
left,
Yeah.
right? That's pretty interesting. But you take a look. We have a chart on rates on U.S. credit card, and you just see it just going up pretty substantially.
Is that a direct result of the Fed raising rates?
I think that certainly plays into it because, right, those revolving rates do kind of tee off of that.
Yeah, but I mean, you went from basically in 2022 16% up to 22.8% where we are now.
Well, just think about it. When money costs nothing, right? Credit card, they've got to kind of tee off of that. So it costs, I don't know, it all just kind of plays off of it, right?
It's funny because you can still see, even in an environment like this, there are still opportunities to go when you're buying a big making a big purchase, you can still get 0% financing on certain things. But when you read the fine print, you realize, you realize, well, if I miss a payment ever throughout the 5-year duration or whatever of this loan,
it's nasty.
It is nasty.
It's super, it's really tough. We live in an environment where so much information, and when we're doing something like that, there's forms and there's all that fine print. You really need to kind of watch, especially when it comes to loans and
There's
stuff.
always a catch, right?
Always a catch.
Or so I'm told.
Some
say there's always a catch.
What is it Mom and Dad always said? If it sounds too good to be true, probably
it's too good to be true.
All right, folks. We're going to head over to our TV colleagues in just a moment. On a day where we are getting ready for the equity markets to be closed tomorrow, bond markets close early tomorrow, in light of the funeral former President Jimmy Carter. Tim and I will be covering that here right at Bloomberg headquarters and walking us through really kind of the movement around that as his casket is moved from the nation's capital in Washington, D.C. and back home. So we're going to be monitoring that. In the meantime, we're just monitoring what's going on in the trade. And like we said, kind of a mixed bag. About half the names in the major market averages are higher, half are lower. And right now we've got the S&P 500 just up about 6 points, as we say, just up about 0.1%. NASDAQ 100 a little bit lower, folks, down about 4 points. Call it flat, though, on the day. And as I said, if you dig into the S&P 500, half those names are higher, half are lower. All right, do not go anywhere. We're heading over to our TV colleagues. Tim and I counting you down to the close, along with Alex, Romaine, and Scarlett. That's because the closing bell starts right now.
Yeah, now we wait for 8:30 a.m. on Friday and that jobs number.
A full breakdown of all of today's market action starts right now.
The closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through that closing bell. A global simulcast, it starts right now. Scarlett Fu in the TV studio. Carol Massar, Tim Stenovic in the radio booth as we parse the most crucial moments in the day. I am not okay, Carol. You know that. I've never been okay.
He was better than yesterday.
Oh, man, I know, but you sound worse.
Thank you,
That's
Carol
so sweet.
We're concerned,
I appreciate the pep talk.
We are concerned.
But guess what, Carol Massar?
What?
I mean, we started the day. Markets looked like they were going to finish the day in the red, but as we get closer to the bells, kind of poking back into the green, at least for the Dow and the S&P.
Yeah, rather pokey, right? And almost call it unchanged. I've been looking at some of the energy names and utility names in particular that are in fact impacted by those West Coast fires, Southern California fires. Edison International, man, it is down about 12%. And you've got Sempra Energy down about 2%. So some concerns about, obviously what's going on there and their ability to handle the fires, but also the impact on them as well.
But not much conviction in today's trade at all. I mean, you look at the S&P 500, searching for direction for much of the day, moved between gains and losses, Scarlett, more than 24 times today?
Yeah, well, everyone's waiting for the jobs report to maybe kind of give us some sense of what's to come. But I suspect that won't be until January 20th when you really get a sense of what the incoming president will do with executive orders that will hint at the sequencing of his policy that people will really be able to make some more permanent bets.
I'm still really weirded out by the weakness in the semis, seemingly sort of out of nowhere. And you look at the moving averages, it's just weird. They're like all converging. It doesn't look really good. It looks kind of ugly.
Yeah, interesting day here in the markets. We talk about quite a few sectors actually in the green, but unfortunately the ones that matter were in the red. The net effect of it all is a market that we're just going to kind of call this one relatively unchanged. The Dow Jones Industrial Average is going to finish in the green. It's up by about 90 points, but that's only about 0.2%. The S&P 500, which spent most of the session in the red, is going to close in the green, higher by about 9 points or 0.1%. The NASDAQ is going to finish in the red, but only by less than 0.1%. And the Russell 2000, that was your primary laggard, but that was only down 0.5%.
All right, that's your read at the big board. Staying with the S&P 500, guys, despite little changed on the day, you do have about 290 names to the upside, some with some significant gains, Scarlett, and 209 names in the S&P 500 to the downside, also with some significant losses.
Yeah, and if you look at the sector breakdown, very much tilted to the green. You have 8 sectors gaining ground, 3 in decline. But what's notable here is that no sector moved more than 0.75%. Healthcare, materials, and consumer staples each gaining about 0.5%. They're the best performers. The worst performers are communication services down 0.75%. Energy and utilities basically unchanged at this point.
All right, guys, let's get to some of the individual gainers. Number one gainer.
Are these going to be good, Carol?
They are now.
Stay tuned, TBD. Your number one gainer in the S&P 500 is eBay. This is a good one, finishing the day with a gain of just almost 10% here, rallying after Meta Platforms offered to publish listings from the online auction company on its Facebook Marketplace service. We talked with our Pootam Goyal. She said, just keep in mind, this is a test. So we're going to have to watch to see if ultimately this is something longer term, but right now investors really liking it and kicking that one up to the upside in a big way. Hey, GE Healthcare Technologies, this was a top gainer in both the S&P 500 and NASDAQ 100, a gain of about 3.5%, upgraded to buy over at Jefferies, which encouraged investors to take advantage of a recent pullback in the company's share. They did raise the price target to 103 a share from 95. GE Healthcare finishing the day at $86 and change. And this one, a small cap mention, I might get some digs from Romaine as a result. Accolade, ticker is ACCD, and this share price surging 104%. This is after Transcarent agreed to acquire the healthcare services company for $7.03 per share in cash, representing a total equity valuation of about $621 million. It's just a reminder that stuff's going on. We have a lot of news coming at us from different areas, from DC, from Wall Street, and so on and so forth, but some deals are happening going in and around the news cycle. That's why I mentioned it.
We've also been watching those devastating fires out there in Southern California, where thousands so far have evacuated. It's having an effect on some publicly traded companies as of right now. Edison International down more than 10%, the worst performer in the S&P 500 on a percentage basis today. It fell today the most since March of 2020. This is a result of what's happening out there in Southern California. Edison International Southern California utility is the largest in the region. though analysts do note that so far there haven't been any reports on utility equipment being involved in these fires. The company shut off electricity to about 136,000 homes and businesses in an effort to prevent wildfires and warned it may need to cut power to additional customers. Shares of Lyft falling by more than 6% today. This after Delta Airlines announced that it would replace the ride-sharing company and link its SkyMiles loyalty program to Uber a little later this year. So the new agreement is going to allow customers to link their Uber and SkyMiles accounts and then earn miles for eligible rides and deliveries. Morgan Stanley analyst Brian Nowak out with a note saying that the loss of Delta partnership poses risks to Lyft's growth strategy and achievability. Rigetti Computing, did you guys see what happened with quantum stocks today? Quantum computing stocks? Okay, this one down by more than 45% today. Among other companies that fell linked to quantum computing, NVIDIA CEO Jensen Huang said that very useful quantum computers are likely decades away. D-Wave Quantum fell more than 30%, Rigetti Computing falling more than 40%. Though we should note last year, this stock in particular was up by close to 1,500%.
Oh, wow. Okay, so resetting some expectations there. I let you finish today, Tim. It feels like a big moment for me. All right, take a look at the bond market. You're seeing buying in the front end. You're seeing a whole lot of nothing happen in the long end. But with the levels that we hit that were something. So the 20-year at one point hit 5%. We had that 30-year auction, 4.9% was the yield there. It was a strong bid to cover. The stops were the highest since 2007. It just shows like you hit that number, you hit near 5%, and there are buyers that want to come in for that. So it's going to be really interesting. The bond market is open tomorrow. It closes at 2 p.m. Equities are closed, so definitely watch that space in the long end.
All right. One of the things we are watching, or one of the spaces, is out in Vegas, right? CES, some really cool technology. We're all tech obsessed. On our radar, it's not at CES, but how about some lemon squeezing robots that are saving Chick-fil-A about 10,000 hours a week? Sounds kind of cool.
Yeah, so folks at Chick-fil-A, the folks who work there, were squeezing 2,000 lemons a day. Now they have machines squeezing as many as 1.6 million pounds of fruit, and there's hardly any human help. Makes me think of what they've done at Chipotle over the last few years with the Autocado.
Oh, right, for guac, yeah.
Exactly. Yeah. Moving the human out of there so then they can focus on other things, and you got the robot making the guac.
You know, this facility is bigger than the average Costco store. You guys know I'm obsessed with Costco. So that's roughly 190,000 square feet. And then it ships all these bags of juices to the Chick-fil-A stores where there is a role here for workers. They add water, they add sugar, and they make the lemonade.
I don't know. Can I just say something? I mean, the way we say it, like robots, it feels like they're like robots that are squeezing lemons, but it just looks like giant machine presses, no?
Yeah. What was that you were just doing? Can you
robot. Robot. For those on radio, I'm doing a cool thing
like
with
auto
my
plants?
robot.
Those auto plant robots?
Yeah, but it looks like just a huge, like, you know, presser.
Like an Elon, like humanoid robot, right? Like with hands.
It's not that.
good
Yeah,
stuff.
exactly.
Well, speaking of robots and speaking of technology, you know, CES is showcasing a lot of smart dashboards, a lot of you know, extra things that I don't know anyone is asking for.
Yeah,
do you want your dashboard to talk to you?
I don't.
And tell you all kinds of information as you're trying to keep your
I don't
eyes
want my
focused on
husband
the
to
road?
talk to me and tell me information while I'm trying to
How
keep my
about
eyes on the
interior
road.
lighting to reduce your motion sickness?
Do I need that? I don't know.
Or AI-powered voice assistants that are telling you where you're going?
Do I trust them?
I don't know. That's a good question. Romaine, you up for this?
I don't know. I'm too weak to talk. I'm sorry. I'm verklempt. Sorry.
You know Romaine is not feeling well when you don't hear Romaine.
Can we get a robot to wheel him out when we're done?
I would love
Rather
that,
than wheel Scarlett in, can we wheel
Squeeze me some lemon.
Oh, nice one.
Lemon and some hot tea. Can the Chick-fil-A robot do that?
But to Scarlett's point, I feel like, remember when CES was like, this was the next tech thing and you were never going to see it unless you were at CES? Now it's like, who asked for that? Like,
Yeah.
who's asking for these things?
Kunjan Sabani was on our program earlier, and I asked if he had a chance to walk the floor and check out some gadgets, and he shared some with us. He said he was really focused on the pet mental health gadgets, the pet wellness gadgets.
How did they do that?
Stuff that was totally out of reach for him as a consumer, and he's like, you wouldn't believe what they have here showing off for pets.
Yeah.
Who reviews the product, the pet or the owner of the pet?
For the pets. Haven't you seen like on Instagram, like those little pets in the like little pet spas and things?
No, I
No,
really
Carol
haven't
Massey,
seen
no.
that.
He gets a different feed than
This
we
is
do, yeah.
advanced civilization, right? Our pets
Yeah.
are. I want to be my pets when I come back.
I would just like my dog to stop eating, the Christmas tree needles off the floor. How about that?
Well, apparently you can go there. Maybe there's a machine that can help them do that.
All right, we could go so many different
You
places.
get mental health counseling for that.
All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Massar. She is still in human form, not in pet form at this point, despite her wishes.
No, not yet.
Not yet.
Next time around.
Hey, investors today, like the narrative in the early part of the day was about the CNN report that the president-elect is mulling declaring a national economic emergency to provide legal ground for universal tariffs.
Right.
Everybody was trying to figure out, okay, is this new? Mike McKee sort of telling our newsroom, this has been announced before.
Yeah, he's talked about it before. Right.
What does it mean? We saw the reaction early in the bond market and the equity market. That's on the public side and in the bond market. Mm-hmm. What about small businesses? How do they navigate this environment?
Yeah, and that's something we wanted to talk about. And we've really got a great guest to get into this. Elizabeth Gore is back with us. She's president and CEO of Hello Alice. It's a fintech platform for small businesses. She joins us from Sonoma County, California. Good to have you here with us, have you back with us. You did join us last before the election. There's lots of uncertainty. Now business owners are at least certain about one thing, and that is that Donald Trump will be back in the White House for a second time. That's going to happen in just a couple of weeks. But we keep hearing about things that his administration and he may be doing. Curious what's top of mind for you. What are you hearing from your clients in the small business community?
Well, thank you for having me on. I would say out of the 1.5 million small businesses on Hello Alice, one thing they're trying to do is just learn what is Trump's small business policy? What does the new head of the SBA stand for? Are they going to delineate corporate with Main Street small business? So there's a lot of questions out there. I think the one thing is there is a optimism about the economy getting boosted, more receipts coming in, but then there are concerns about continued inflation, and then there's a big uncertainty and concern about tariffs.
So, it's hard to generalize when it comes to small businesses because you have some small businesses that, may not on the surface be affected by tariffs because they're not necessarily importing something, maybe service-led businesses. What are the companies on your platform saying about how they will be affected by tariffs? That's where I want to start.
Sure. And let me just say there is a short-term view and a long-term view, which are very different. And then there's the bridge in the middle. So if you'll bear with me, in the short term, there are concerns about anyone who have, in their spreadsheet, the cost of goods sold. So if you look at foodstuffs, if you look at any kind of electronics, if you look at any kind of packaging, and then for those that are opening net new, even if you think of industries like a restaurant, they're still going to have to buy that oven, buy those electronics, and so on. That's where you're going to see higher prices due to tariffs. So there is a concern about the immediate short term with already having inflation, already having concerns about costs. That is where there's a real concern. In the long term, if the objective is really to bring jobs inshore, bring in supply chain inshore, bring in everything from food services and cafeterias and the products they need to manufacturing T-shirts, bring those into small businesses in the United States, that would be a huge plus. The question is, what is the bridge in between? So costs are going to go up. And you even heard Elon Musk say it's going to be hard in the beginning. Small businesses are coming out of COVID. They're coming out of huge natural disasters. My heart goes out to all the small businesses in LA right now. And so they already are having a tough time and capital is expensive. So we need to help them through this short-term increase in cost if we're really going to get to this long-term incentive to bring goods inshore.
What I was wondering, though, is that I think there was a thinking initially that tariffs were going to hurt most kind of big global companies that work around the globe and their supply chains are all around the world, and that small business tend to be more domestically focused and that they would benefit. But is that not the case? Because I don't feel like I'm hearing that from you.
No, that's wholeheartedly not true. So if you think of, ironically, the P&L of a small business is is very much like a large business, right? They have to, if I'm anything in food, agriculture, food services, I'm still buying eggs, I'm buying machinery, I'm buying all the things that a global conglomerate is buying. If I'm the only place I would say this is not going to impact is that kind of direct services. So your accountants, even your doctors, your kind of local services, but anyone who is buying anything that you can touch and hold is going to get impacted by this in the short term. And if you remember that most small businesses only have about 3 months of cash.
Okay, that's where I wanted to go. Yeah.
Yeah.
So who absorbs this?
So there's two things that can happen. They either are going to have to diversify cash flow. They're going to have to get either grants or going to have to get a small business loan, or they're going to have to pass those costs to the consumer. And I will tell you, if you look at my mother, who will literally move coffee shops if they change the coffee by 5 cents. This is a tough thing for small businesses because they are so consumer facing. They have loyalty, but there are people that choose them because of price. The average American right now are also, if you look at why they voted for who they did, they want their costs to go down too, right? So this is a short-term conundrum, but I do think there's solutions. And I'm encouraging the new heads of SBA and Commerce and Treasury to think about, can we get small business grants? Can we get really low interest loans out to small business in the short term?
Do you think that they can?
Absolutely. I mean, look what Trump and Biden accomplished during COVID, getting as many grants out the door as possible.
But the challenge with that is, now could that be looked at as something that's inflationary?
Well, that's a fair point. I'm not an economist, but I know what small business owners need. And when small business owners succeed, they do create jobs, they create a better economy. And that's really what everyone's looking for right now.
Are people expecting a better economy in 2025? Are small businesses expecting a better economy, or is...
Yeah, it's interesting the difference between your average consumer and then a small business owner. So small business owners are coming out of their peak season right now, which is from September to December receipts, not just any kind of stores, but food services, restaurants, and so on. And so we're coming into January, we're dying for the data, but it looks like it was a good quarter. And so we are seeing some optimism. Also, there was a tremendous amount of tax cuts under the Trump administration. So while we don't know what's going to happen for small business yet, we're hoping to see that as well. So there is, through our data, 75% of small business owners are more optimistic. I'm not saying because of Trump, but because of where the economy is going in 2025.
When was that? When did you get that data, and what is the benchmark for it?
Yeah, so we were asking this in the first part of December before they actually got all the receipts in for holidays. So I'm hoping that the optimism is going to go up even more if we had a good Q4 in December.
Is that notably different than before the election?
It is. Before the election, that's a good question. It is, I will say it's notably different. And part of that, I also think, is the fear of uncertainty around how the elections were going to play out, not just who was actually being voted in, but how it would play out with a transfer of power. There was a lot of concern there. There was kind of a holding back on optimism, fear, all of it. There's a lot of ambiguity. Small business owners like routine. They like focus. They like having a plan. So I think that now that we're through the election, we're seeing both a sense of relief and optimism. Now, when you boil that down, is it because of the candidate? Is it because of the economy or so on? I wish we had data on that, but only a fortune teller knows.
You do help with funding. 30 seconds left. Are more companies looking for funding? Are they finding are they feeling more stressed? Or is it a case of businesses going so well they need some more funding to grow? And again, just got about 30 seconds.
Yeah, so capital is still expensive, but we are seeing a growth in those applying for funding, not to survive, but actually to grow, which is a great sign.
All right, going to leave it on that note. Elizabeth, thank you so much. Elizabeth Gore, she's president and CEO of Hello Alice, joining us from Sonoma County, California. Great perspective in terms of small business and an upbeat perspective, I would say, to say the least, as we try to figure out kind of which way we go specifically in 2025, which is going to kind of set us up really well for our next conversation.
Yeah, Tim O'Brien's going to be joining us in just a few minutes. He's senior executive editor of Bloomberg Opinion. He's got a good sort of overview of what to watch for, the themes coming this year. Kind of one man. is really at the center of it all.
And I got to say, one of the favorite things that as we do our read-in every morning is what the Bloomberg Opinion team is writing about, just different perspectives. So we're going to touch upon that. That's next.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with sales numbers out of Costco. Costco's December total comparable sales up 7.4%. Estimates were for a gain of 3.7%. After hours, we got Costco up by 1.2%. S&P 500 index today up 9, a gain of 0.2%. The Dow up 106, up 0.3%. Nasdaq fell 10, a drop there of 0.1%. No U.S. equity market trading tomorrow. The 10-year 4.68%, the 2-year 4.27%. Gold up $15 the ounce, 26.63, up 0.6%. A retreat for crude oil today. WTI West Texas Intermediate crude down 1.2%, 73.34 a barrel. And Bitcoin now with a $93,000 handle, just under $94,000, lower today by 2.6%. Bitcoin 93,989. Just getting word that U.S. Steel board member Jay Johnson has resigned, and Albertsons has raised its adjusted earnings outlook for the full year. Albertsons shares up today by 0.8%. That proposed deal with Kroger fell apart. We've got Kroger down 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, safe to say many things happened last year that definitely caught us off guard. And as our Bloomberg Opinion team notes, a lot happened this past year that was not on our 2024 bingo cards. And with Donald Trump's return to the world stage, it's all but certain to be an unusually predictable year. So the Bloomberg Opinion team lays out for us. And what's top of mind for their columnists, everything from AI, crypto markets, housing, and more. We wanted to hear more because there is potentially a lot coming at us, Tim.
Well, to lay it all out for us on this Wednesday, we've got with us the head of Bloomberg Opinion. He's Bloomberg Opinion Senior Executive Editor, Tim O'Brien. He joins us here in the Bloomberg Interactive Brokers studio. Tim, also the author of Trump Nation, The Art of Being the Donald. Tim, the year ahead. How do you follow a year where there were so many surprises, including a shakeup on the presidential ticket just months before the election? How do you and the Bloomberg Opinion team, with a degree of confidence, go about thinking about 2025, the year ahead? What's a highlight?
Well, you know, I feel like I've got a bit of imposter syndrome sitting here because we have so many people on our team who are smarter and more talented than I am, and they're all over the globe, and there's probably 65 of them or so. And we put together, I think, around 25 pieces for the package you're referring to. And they covered everything from markets to the economy to politics, and all of the ideas basically were generated by them. But, you know, I was sort of scanning the package after you asked me to come on, and I felt, well, you know, the tether here, and it's very hard to have a single tether when you have more than 24 pieces, but it is how large Donald Trump looms over so many things right now, politics, markets, and the economy. And there is no clarity other than, you know, past performance is no guarantee of future returns. We've had him once in office. We know that he's chaotic and anarchic, and we got a taste of that this week. But, you know, in really practical ways, he's pursuing policies. He wants to conquer inflation.
Right.
But he's pursuing policies around tariffs that are inflationary. He doesn't want the U.S. to get embroiled in overseas wars. But he also is going, I think, to assuredly be a staunch defender at a minimum of Israel.
I thought you were going to say something about Canada or Panama Canal. Or
Greenland.
Oh, I think that's, I mean, I think, you know, invading Greenland, invading Panama to take the canal back, and merging with Canada is Donald Trump simply stirring the pot to create anxiety. And I'm not saying I think he can't help himself, but I don't think those are going to be practical outcomes. But Ukraine is an ongoing war, and he's been very wavering in what he wants the U.S.'s relationship to be to that conflict. He hasn't on Israel. And then China and Taiwan is a wild card. And I think those could potentially be consequential and may force his hand. These other things, I think, are just radio noise from the great distractor.
No, I think that's a really good point. And I keep thinking, you know, Tim, about the first administration and the second administration. Is it going to be a repeat? I know that during the first go-round, we took every news conference, every press conference, because there's often things that were said that move the markets or move certain companies or certain industries. But I also do feel like it's been a little bit more orderly going into this second go-round. So I'm curious how you and the team are thinking about, you know, is it going to be similar or a little bit different?
Again, he's a wild card, so nobody knows. It has felt a little bit, I think, for all of us, like the calm before the storm.
Yeah.
Look, a real proxy for this will be this omnibus bill that the Republicans are crafting. They're trying to have it ready to be on his desk by January 20th, so it can move through the House by early April and go to the Senate at the end of April. But it has 5 or 6 humongous policy issues embedded in it: immigration and the border, defense, energy, tax cuts, and on and on and on. And And they're not even sure yet if they want to do that as one omnibus bill or break it into two. Their own caucus is divided over it. There's divisions within the House on the Republican side. There's divisions within the Senate on the Republican side. It doesn't speak well towards order. So I think what's different this time is he's a known quantity,
right,
compared to Trump 1.0 as a president.
And I feel like he has some knowledge, right, or his team, or some, like, right?
They know how the game is played.
A little bit, right?
Yeah.
Well, that's what I wanted to talk to you about, because there were certain, quote, adults in the room during the last administration, and much has been written over the last 4 years, during the president-elect's last administration, I should say, about how there were people in there when they were asked to do something, they would sort of kick the can down the road, make sure it didn't happen. Is that all out the window now with the folks that the president-elect is surrounding himself with?
I mean, I think where he has sharpened his antenna is around exactly those things. Are people carrying out my orders? Do I have people that will do that? And I think everyone in this administration will be a loyalist. That's not to say, though, that they will all be court jesters. I think, Marco Rubio, regardless of where one thinks about his politics or his policy preferences, he has the bona fides to be the Secretary of State. I think Mike Waltz is a national security advisor. I do not think Kash Patel should be anywhere near the top of the FBI. And so you have this mix of people who are all loyalists, and a small number of them are adults, and the rest of them have a rodeo clown component that people should be concerned about. Again, not, I think, on ideological grounds, that's inevitably a part of these things, or partisan grounds. It's just, can they manage these things? Can they do the job, and can they deliver for the American people? And some of them I wouldn't hire as babysitters.
Ouch.
So,
no, right. Like, and we read about these opinions a lot in general in media and so on and so forth, like the concerns about these individuals in those posts. Having said that, is kind of the stern uncle or the stern grandparent the markets, our bread and butter, that if indeed policies come out that are questionable or we see market reaction, we know that the president-elect likes to watch the financial markets.
Well, and there's already you look in the UK, like what happened to Liz Truss.
Yeah.
And you're seeing a little bit now with Rachel Reeves and Starmer, where the UK markets are being disciplinary forces, and we're seeing it here in the U.S.
I love that, disciplinary forces, right?
Over the last 10 days. Each time, and Trump has gone back and forth on how severe a tariff regime he might impose. And on Monday, the dollar totally tanked. But then Treasuries kind of wavered. But now you've seen over the last few days, the long bonds have gone up, and Trump does pay attention to the markets. He knows what it's like to have to deal with debt you can't pay back from his own personal experience, and he's going to watch this in the context of the U.S.'s own balance sheet, I think, for sure.
You mentioned the UK, and it makes me think of Elon Musk and his involvement in the U.S. election, his involvement in UK politics, German politics too, in recent weeks. How do you look at that relationship between Elon Musk and the president-elect?
I think it is mutually self-serving, if that's an intelligible way to describe it. I think they both enjoy that each of them is out for themselves, and they see one another as useful forces to partner with. I think Trump likes being around the success halo of Elon Musk, one of the most successful entrepreneurs in the history of the United States. And Musk likes being near this person who is a centrifugal force of political power. And both of them like to roll exactly as they please, and they like to use social media platforms to shake people up. So I think they feel well met by one another. I think we've talked about this before. The one, interesting fact here is Trump doesn't like to shut the spotlight. And he is just not going to tolerate someone else getting as much attention as he gets. And I think at some point, all the jokes that have come about President-elect Musk, is going to land with Donald Trump at Mar-a-Lago and whether or not he wants to stay in partnership will be an interesting thing to watch.
Right, he's already pointed out, right? He said that Musk can't be president, right? Because he's not a U.S. citizen. I have to say, my daughter Aggie, we were just talking about this at dinner last night with my husband, and she's like, the ultimate test of Elon Musk and Donald Trump will be when they do the girls' trip to Mexico. You know, when when the girls all go to Mexico and you find out who's really friends. One thing I want to ask you, because one of the items in the columns that you guys highlighted this year ahead is Democrats got routed, but there's a path back to victory. We were already talking about earlier today with Billy House about the midterms. Is it too early? I mean, how soon can we start thinking about kind of the next election go round?
Well, you know, midterms are never good for the party in power, whether it's Republicans or Democrats. It's always hard to hold on to the House. The Republicans have a very slender hold on the House right now, you know, and we saw that in the speaker battle last week, just how tenuous that can be. They're in better shape in the Senate. But I think it's on all of the GOP caucus's mind that they have a short window to try to deliver legislation and to use the thin majority they have right now. I think the issue for the Democrats, though, is who is the standard bearer?
Who is?
I think that's going to be, I think that there's going to be a battle around that. And I think there's a generational issue as well. And then I think also, I think the Democrats have to think about how do they talk constructively, optimistically, and in a convincing way about the economy. Because I think that has haunted the Democrats for quite a while. And there's this middle block of voters who's been bouncing between both parties. And Trump exploited a very interesting thing was he spoke to the working class about their needs without actually delivering them salvation. And that's going to be tested now. He said he was going to solve inflation. Okay, solve it.
But even on Monday, he said bringing down prices could be harder than...
Right, but
Tuesday,
there you go, right?
Yeah, well, then I don't think that voting bloc is going to stay with him for a long time if he doesn't deliver some goods, you know, practical goods in the next 2 years. And, you know, reality conspires against presidents.
And there's a bigger message that there are a lot of people who don't feel represented anymore, right? Whether it's Democrats or Republicans, of folks that are really struggling, right? And they're looking for some answers and something different.
Because we're in the middle of this epic and ongoing shift from an industrial and manufacturing economy to a services and intellectual capital economy. And some folks are being left by the wayside, even though they've worked hard and they've bought into the American dream and they've checked off the boxes of what you do to get there. And history is passing them by, and it's hard for politics to answer some of those questions.
You're the best. So love it.
Thank
Senior
you.
Executive Editor, Bloomberg Opinion, Tim O'Brien.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story. President Biden's administration is planning one additional round of restrictions on the export of artificial intelligence chips from the likes of NVIDIA and AMD, only days before leaving office, a final push in his effort to keep advanced technologies out of the hands of China and Russia. After hours, we're looking at NVIDIA shares lower now by 1.5%. Advanced Micro Devices shares down now by 1%. The Dow, the S&P both higher today. NASDAQ lower. The S&P fell up 9 points to 59.18, a gain of 0.2%. The Dow up 106, up by 0.2%. NASDAQ lower by 10, a decline of 0.1%. 10-year 4.69% with the 2-year yielding 4.28%. Gold up $13 the ounce, up 0.5%. 26.62 where we stand on the precious metal. Crude down 1.2%, 73.34 a barrel on WTI. Bitcoin below 95,000, 94,460 on Bitcoin, down by just about 2.1%. Wall Street, meanwhile, looking ahead to Friday morning's jobs report, so what might be a market-moving number. Sarah Wolf is U.S. economist at Morgan Stanley. She was interviewed this morning on Bloomberg Open Interest.
I think we would need to see, some type of material upside in payrolls well above 200,000 or downside below 100,000 to get a really strong market reaction. If we look at the mix of data on the labor market this week, we're not really getting a clear picture.
Sarah Wolf of Morgan Stanley, and speaking of that mix of data, the payroll processor ADP this morning reported business hiring slowed in December. Job cuts, meanwhile, moderated, with weekly jobless claims falling to 201,000, the fewest in almost a year. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. Well, we talked about REITs earlier. Someone involved in real estate, energy, farming, ranching, and so much more, and is involved in a big anniversary for the United States, including a special project on the east side of New York City. We've got with us Michael Hirschman, is CEO over at Soloviev Group. He joins us here in the Bloomberg Interactive Brokers studio. Michael, welcome back. Good to see you. How are you?
Well, I'm pretty good. Thanks for asking. Had a nice holiday season, but back at work now.
Good. Well, you guys are very busy. I mean, you're one of the largest landowners in the entire United States. You've got your hands in everything. Energy, ranching, farming, commercial real estate, office space here in New York City. We haven't had a chance to catch up with you in quite a while, so I want to start big picture and just get your thoughts. We're asking everyone about the election, what a new administration means for their business. How are you thinking about things heading into 2025?
Well, we are looking forward to the unpredictable because that's what our new president is. He's entirely unpredictable, and we don't know from day to day what's going to happen. But we hope that interest rates will continue to go down, at least for the next few quarters. And from our standpoint, things are booming, particularly in our commercial buildings, because we have very high-level commercial buildings in New York City.
Top tier.
Top tier. And
Makes a difference, right?
Those buildings have been doing very, very well, despite the downturn in commercial real estate.
So in other words, demand, getting the price you want in terms of per square footage, all of that is coming through.
Indeed, yes, yeah. I mean, we'd like to think that 9 West 57th Street, which is our main building, is the #1 building in New York, if not the United States. Some might argue that we're #2, but I doubt that we'd go any lower than that.
Well, quantify if you can as much as you can, because we love color. We love the commercial real estate space and talking about it, office demand in particular. As you know, the last couple of years, coming off the pandemic, everybody's talking about, those properties that are in trouble. What has office demand been like? And especially, we've seen a lot of finance firms moving further and further south to be near Grand Central, Park Avenue. Is that taking demand from them? Is that helping you guys?
I think it does help. Look, there's still a lot of folks that are hurting out there, both not only commercial, residential, from a homeowner standpoint.
Right.
We know that there's a lack of affordable housing, not only in New York City, but frankly across the nation. But we we do believe that this administration is now setting out on the right track to make it easier for developers to develop housing, particularly affordable housing. And we expect the commercial boom to continue because so many people are coming back to work now.
Right. We just talked about JP Morgan this week, according to some sources that they are expected to say everybody's got to be back in the office 5 days a week. But I am curious, what can you tell us about office demand specifically for 9 West 57th? So stronger than it's been, or what can you tell us?
It's stronger than it's been. The pickup began really the last half of last year. The first half was slow, but the last half was booming, and it's continuing into the new year as well.
And is it financial clients?
Our building is on 9 West, which is our primary.
That modernist skyscraper.
Yeah, it's that building was built in 1974. It's
incredible,
and it was the first sloped office building. I
love that.
Whenever I walk by, I look up at it. I'm like, how is it doing that?
Well, what was interesting is back then, all of the architectural community thought it was the ugliest building ever built, and 10 years later, it was winning awards. But we're 97% occupied.
Wow. Is it financial folks? Is it a broad swath of different types of occupants, commercial occupants?
Financial firms, high tech are our biggest clients. And there's, in the Class A buildings, frankly, there's just not enough space to accommodate their needs at this point.
I want to help our viewers and listeners understand the business, because we're talking a lot about commercial real estate, but you guys are in railroads, you're in mining, you're in farming, ag. Where's the wind and solar energy? Where's the biggest area for growth?
Biggest area for growth clearly is in green energy.
In your whole portfolio?
Very much so.
Wow.
Very much. We've converted tens and tens of thousands of acres of agricultural and ranching property for wind and solar. The needs are unending, and particularly now in the area of data centers, data processing centers for AI, there's just not enough energy to support the growth in that area.
The president-elect has said he doesn't want to see any more windmills and wind power in the United States.
You know, he has said that, and he's talked about that in the past, but when he's talked about it in the past, he often was referring to offshore and the fact that it's bad for birds. So he really didn't relate it to the need for energy, but it was more of an animal rights issue.
Yeah. So you're not concerned about policy around that?
No, I don't think that we're going to see a cutback in the growth in green energy at all.
What can you tell us, forgive me, I'm throwing this at you because it was a story today. President Biden, the administration, I guess before he heads out, looking to streamline permitting for geothermal energy developments as part of a way to, increase the infrastructure for AI data centers. What else can you tell us about, from what you are seeing, your vantage point, about those AI energy demands? Are everybody thinking about wind and alternative energy? I mean, what else are you hearing on that front?
So look,
because we're starting to talk about nuclear, like investments in nuclear.
So we're talking about small nuclear facilities. Right now, it's a question of what is economically feasible in the short term. Right now, we're really talking about wind and solar because it's already established. Right. We know the economics behind it. Geothermal, we'd love to know more about it. Nuclear as well. By the way, a lot of these data computer centers for AI, they're being built in areas that are not heavily populated. So going to a nuclear or other alternative forms of energy may not be a bad idea because you may not have a lot of community opposition.
Right.
Okay, so we talked commercial real estate, we talked wind energy, and we talked about green energy. Before we talk our one more area of growth for the company going into 2025.
Our hospitality group is growing exponentially. Hotels, restaurants, and
Where?
Of course, Across the country, here in New York, and of course, we're planning an integrated resort on the First Avenue property, which would bring restaurants, retail, casino, 1,200 and some odd room hotel, 2 residential towers. But,
Well,
that,
that
but
casino-
before that happens,
Yes.
of course, we're going to have something called Path to Liberty, that which unites us.
That is a segue. That is
I was going to ask you about the casino bid, but tell us about what you guys are doing. This really cool exhibit on the east side of New York.
Throughout last year, we had an exhibit on the site called Field of Lights.
Yeah.
And it turned out to be very popular. We had over 80,000 visitors to the site. And it ended in December. And I was thinking about what can we do next while we wait for the state to make up its mind as to who's going to get these 3 downstate licenses. And, you know, I was thinking to myself during this last campaign, the word democracy became so politicized. It never happened before in the history of our country. Who's more democratic? And, you know, they really weren't talking about the underlying principles of democracy: life, liberty, the pursuit of happiness, freedom of speech, freedom of press. They were talking about democracy as a form of government, not a perfect form of government.
Right.
And we all know that trust in government is down, so trust in democracy seemed to be going down. And then, of course, I realized 2026 is a very important year here, not only because we're hosting the FIFA World Cup, but it's the 250-year anniversary of the signing of the Declaration of Independence. It's our birthday.
Yeah.
And I thought, I don't see much planning going on across the country to celebrate that. So I decided, let's do something, a prequel to 2026, to get people excited about our birthday. And so we've gone across the country. I've sent producers across the country to interview ordinary Americans about what they like about America and what they dislike about America, and how the underlying principles of democracy has helped them in their lives and in their careers. And we have some touching stories to tell. We'll have screens, very large screens, along the path to liberty, which is the path that we already had developed along the Field of Lights.
Right.
Ordinary people talking about the importance of freedom and how it's helped them in their lives. Some of these folks are farmers, some of them are firemen. They come from all walks of life.
I have to say, this is lovely, and I feel like it's like every time I get into either a cab or something, or even an Uber or Lyft, and what's kind of cool about it is it's often people who've come to America looking for an opportunity or something, and I love to get their life stories, and they remind us of why they've come here and why, and they often will say, you guys have no idea how good you have it here.
Well, it's not only the people that, you make a very good point, not only the people who come here, money comes here.
Yeah.
If you look at the sovereign funds along the world, around the world, whether it's Norway or whether it's the Saudis or the Qatari, whoever it might be, they're investing in the United States. They're investing in New York City. They feel stronger about America and America's future than some Americans do. Why is that? Is it because people are unhappy? And if so, what are they unhappy about? That's some of the stories we want to tell. The good, the bad, and the ugly.
Yeah, I think it's great and such a part of our history. I have to ask you 30 seconds. Any update on the casino?
So we're really excited about our project, which we're calling Freedom Plaza. It's going to provide the community with 4.7 acres of green space park, which is sorely needed in that neighborhood.
Yeah.
A museum dedicated to freedom and democracy that will also be a community center, where the communities, surrounding communities, come together, hold events and meetings, where the casino, which everyone, of course, is talking about, is going to be below ground. We're not bringing a Las Vegas style casino with lights and water fountains. We're going to be below ground. And we're doing 2 residential towers, which will have over 500 affordable homes in them.
Which we've got to wait till July.
More than's ever been built on the east side before.
But we're going to wait till July, I think is what I understand, right?
Yes.
Michael Hirschman, we got to run. Wish we had more time, but thank you so much, and thanks for coming in studio.
Well, thanks for having me, and Happy New Year to all of you.
Yeah,
From
fun.
Larry David.
Love it. There we go.
Well said, well said. Michael Hirschman, Chief Executive of Soloviev Group, joining us right here in studio. Thank you, Michael.
Hey, Carol, I was taking a look at our live blog of covering the devastating wildfires out in L.A. a little earlier. Private jets in the news around those fires in L.A. Our live blog pointing out that billionaires Eric Schmidt and Elon Musk's private jets flew out of Long Beach yesterday late afternoon. Alan Smolinski, part owner of the Dodgers, evacuated by private jet yesterday evening, left behind a mansion in Pacific Palisades that Zillow estimates is worth more than $19 million.
I have to say, moments in time, tough times, stress points, as well as optimistic points. Our next guest has a really important vantage point when it comes to the private jet area. Janine Iannarelli is founder and president of Par Avion. It is a firm that specializes in selling business jets, and she is back with us here in our Bloomberg Interactive Brokers studio. We are glad to have you here. It is kind of a weird day, but I am curious, are you hearing from clients who are like, I
need
know.
my plane out in California now to get me out of here.
What are you hearing at all?
Well, honestly, nothing. But that's the beauty of the flexibility that a business jet gives you or a private jet. These people are probably very dialed into what's going on in their own home environment. Let's say they're based out there. So that's the whole purpose of having operations, flight crew. They make the planning and then they execute, and you can do it on a moment's notice. So what do you do first and foremost? Family, pets, friends. And then if you're in a position to dispatch the aircraft, send it back, you start helping with the humanitarian efforts. And that'll probably continue not only through the course of the fires, but post-fire if it certainly will be declared a disaster zone. And that's a program that the National Business Aviation Association formulated a number of years back. They call it HERO. Oh, wow. And it is an airlift program where it diverts and brings in owners, operators of aircraft to focus relief, delivery of supplies into areas that have been declared disaster zones.
You oftentimes see this with high-profile folks flying into disaster zones, bringing supplies from areas that are not affected. Big picture, what's the year looking like as far as demand goes?
A lot better than last year.
Really? Why is that?
Well, we talked about the Trump bump, I think, prior to the elections. And the Trump bump is a little slow to come. I think a lot of people in the industry expected post-election the immediate results where there would be a rush to buy aircraft and close prior to year end. I would say it was modest. Personally, I stepped back from that and said, I think we'll start to see increased activity second quarter of this year. In part because, the administration needs to seat itself. They need to find their footing, even though they're a bit old hat at that.
What are people worried about before these folks who obviously are purchasing have a fair amount of money, right? So I'm just curious, what are they waiting for? What are they concerned about?
Well, let's not talk about just high net worth individuals. Really, the driving force behind the aircraft sales marketplace is more of who my client base is. It's not just high net worth individuals, but let's say privately held, medium-sized companies, even publicly traded. They sit back and they read the tea leaves, and they want to see what's going to happen with regards to taxation. And that was the mantra that was quoted to me over and over again in 2024. And there is exuberance. It's quiet exuberance at the moment. But sorry, Tim, you got a question.
Why are those people buying jets and not chartering them?
Well, that also, I would say for high net worth individuals, privately held companies, it's all about ownership. I mean, a building block to wealth prior to equity markets taking off was outright ownership of assets. You accumulate assets, you have no debt, you're building a solid foundation. And there is a lot of thought behind that. Charter is on demand. Charter has seen a significant rise. You had a guest about a month ago, Mike Silvestri at FlexJet. He laid out the marketplace wonderfully. Great leader. But my clientele, they like complete control of the aircraft. They want to know that the tool